GST overview. The work papers have three objectives as you process GST information. The first objective is to gain assurance that GST tax has been correctly recorded in the client ledger on all transactions for the period. The second objective is to gain assurance that GST has been correctly reported to the ATO in BAS assessments. And the third objective is to reconcile the GST balance sheet account to ensure that it accurately shows the amount of GST owing or refundable at period end. There are 7 steps through the work papers to achieve these three outcomes. You will notice that each step is a separate schedule, going from Schedule G, G1, T, T1, T2, T3 and T4. The first step is to record GST assessed and paid on the portal. This you'll do on Schedule G. Schedule G1 is you will reconcile the closing integrated client account to the portal balance kept by the ATO. The third step is to analyse the profit and loss for the period to estimate GST processed. This will be achieved on Schedule T. The fourth step is to compare estimated GST to the actual GST processed in the client ledger, and this will be achieved on Schedule T1. The fifth step is to compare GST assessed to GST processed on Schedule T2. The sixth step, and this is only required if you think it's necessary, is to analyse the BAS. BAS is lodged compared to the ledger for each period during each quarter or month during the year to see where any assessment difference may lie. I rarely use this schedule now, and as people become more familiar with the work paper workflow, they find it unnecessary as well. The seventh step and final step is to reconcile the GST closing balance that appears in the client ledger. There's no need to remember these steps because the work papers flow through each of them quite logically, and so as you're completing the overall work paper, each of these steps will come up. Let us proceed to the first step, and you'll see on Schedule G you'll be listing the client BAS assessments for GST, the previous period and the current year. Each quarter is detailed so that you end up with the figure where the arrow is pointing for GST assessed by the client. Further, by detailing the payments made each quarter, you will be able to identify the amounts of GST paid during the year. This is the first step. The second step involves reconciling the client portal account and ensuring there are no differences between the opening and closing portal balances and the figures you have processed. If there is a discrepancy, as shown here, it is necessary to keep reconciling the integrated account until that difference is identified and eliminated. The third step involves reviewing the transactions, the ledger transactions for the year, to obtain an estimated net GST processed figure. Much of this schedule, which is Schedule T, will be pre-populated by the previous work you've done, and figures such as the sales figure and the overheads figures will come through automatically. The idea here is that the total GST on sales is calculated, and any items that do not have GST in the sales are taken out to obtain a net taxable supplies figure, or the tax on supplies. For the input side, all expenditures will be listed here, and then those items which do not contain GST are listed here. When you net the two figures off, the tax collected and the tax paid on inputs, you achieve a figure that we're calling net GST, accrued or processed. The fourth step is then to compare the net GST processed figure, which you worked out on Schedule T and appears here on Schedule T1, with what the net GST processed was per the ledger. The ledger figure is worked out by taking the opening GST payable or refundable, adding the GST paid in the ledger, and taking off the GST closing liability as per the ledger to get the net GST processed. Any difference between these two numbers is a discrepancy or an unknown, a difference that has to be explained. That's the fourth step. The fifth step is then to compare GST processed per the ledger, adjusted for any timing differences which are worked out automatically by the Workpaper if the client is on a cash basis, that is, and the assessment with cash effect is then determined and compared with the BAS assessments that you worked out on Schedule G. Any discrepancy needs to be explained. That's the fifth step. The sixth step is the schedule that I'm saying is not used much now because it's not really necessary in most cases, but it enables you to reconcile the GST in BAS returns with the GST in the ledger accounts. The seventh schedule, T4, is a reconciliation of the GST balance sheet account. The amounts in this schedule will be populated automatically, and any discrepancy here will need to be explained. You've now completed or covered the 7 steps in the work papers.